Hey, good afternoon everyone. My name is Ram Dhamija. Welcome to my channel. Today is 12th of May and there has been a spectacular rally in the markets. It's perhaps been one of the best days in the last 4 years, is what I'm understanding. And it's just been phenomenal right from the word start. The markets didn't look back, and this is what I was discussing with you over the weekend also in the video that I had made, that this if this uncertainty goes away, then we our markets are just going to go one way, unstoppable, and that is exactly what is happening. And not only that, the signs of this have been visible for quite some time, wherein even after this stress of the last 2 weeks, the market was not falling. So that was a clear indicator that as soon as this thing gets resolved, the markets are going to fly. And now we are within touching distance of making all-time highs, both on Nifty and Banknifty. Banknifty, in fact, we had already made all-time high, and then we just fell little bit from there. But Nifty had almost fallen 15% from the top that it made in September 24, and now we are basically at 25,000, just another 1200 odd points to go to make the new all-time high. So it's quite phenomenal, quite amazing. Almost a month back, no one was expecting this kind of a move to happen, and now here we are. So I'm going to take you through today quickly what all happened and what is the outlook going ahead. So starting off first with how the charts are looking like. So this is I'll take you through to the Nifty chart first. So this is the Nifty chart. As you can see, I had mentioned about two resistances. One was 24,800 odd, which we have kind of touched today, and the next one, the last one resistance, will be the all-time high. So if we clear this, because this was the last high that we had made before this lower lows and lower highs pattern had set in, and now we are in a higher high higher low pattern. So once this 24,800 900 zone kind of gets taken out, then the next will be all-time high. So we are very, very close to that. And if you look at it, what happened today, I'll show you in the 3-minute chart as well. We opened a gap up, so you can see this huge gap. We opened somewhere around 24,400 odd, and from there, within the first candle itself, all the way through till the end, it was just one way rally, and we ended at about 24, close to 25,000. So this has been today's day, phenomenal day in the markets. And if you look at Bank Nifty, this is the Bank Nifty chart. Bank Nifty, as I had said, had already made an all-time high on April 23rd. Right from there, it was just consolidating and going down a bit. Now I think Bank Nifty is even going to break the last all-time high, which was at 56,000. So we are almost at 55,400 odd. It's just a matter of time, before the next all-time high is broken. Now let us look at what happened in terms of the markets today. So VIX was down 20%. It closed at about minus 15%, but at open it was down minus 20%. So that was a clear indication that the tension in the market is gone off. And there have been a lot of other good news as well in the markets. One was US-China trade deal has been finalized. So that will play a positive impact on the US market. So as we speak, I'll talk about that a little later, that US futures are also up. And then there are other host of good things that are playing out, and all of them are actually having an impact on the markets as well. Earnings are coming in, so that is another thing. As I had mentioned yesterday, India-UK trade deal had taken place, but because of all this geopolitical tension, that got ignored. So that will be another positive. There is a slight negative in terms of the pharma industry, because I think today US might impose some tariff on the pharma companies. That is what Mr. Trump's tweet had indicated. So that sector was under pressure today. But otherwise, if you look at IT was the leader today, and all the other export facing sectors, all of them were up. So a lot of good news is going on in the market, which is great. So this is how the markets behave. Now let us look at the sectors which did well today. IT was the leader at 6.7%. 6.7%, that's almost 7% up today. Metals 5.8, energy 4.1, small cap, mid cap, alpha, momentum, all these names did very well today. So small cap was up 4%. Financial services, which in my opinion is the next leader of the bull market, was up 4%. Nifty 500, which is a combination of small, mid, and large caps, was up 3.86%. Nifty itself was up almost 4%. Then PSC 3.6, banks 3.3, and so on. FMCG was 2.5, and pharma, as I told you already, was flat. So this has been the construct of today. And also within that, one thing that I noticed was that capital market plays. Stocks also started doing well today. So of course, as the market goes up, these stocks tend to do very well. In terms of the international cues, let us look at what the international cues are indicating. One clear thing was that the US futures, so you can see Nasdaq futures are up 3.8% as we speak. So this is because of the trade deal that has been finalized between US and China. So that's going to have an impact. Bitcoin is almost nearing its all-time high. So that's also very good indication of liquidity, how it is going to go. Oil is at 66, which is okay. Currency, look at our currency. I talked about the currency yesterday, that the dollar is likely to weaken against our currency because it was making a lower low, lower highs, and today just look at the fall that has happened. So we're back to 84 levels. Gold has corrected a lot today because the geopolitical tensions are going away. So gold is kind of making a new low, not a new low, but it's kind of correcting a bit. So gold is, I think, if I'm not wrong, down by almost 7% or something like that. But because our currency is also strengthened, so in our currency it's not gone down by 10%. So that is a roundup for international cues. All look good, all look positive, all look great. Our open interest has changed. I was talking about the open interest yesterday, and I told you that open interest changes from time to time, and open interest has changed, and that is a good sign. Apart from that, the other thing that is there is the premium on options, which is very, very high. So today what happened was that the calls and the puts did not decay at all. In fact, right after the open, even the puts did not decay. So our straddle opened at about 150 points less from the Friday closing, but at one point in time it had almost come back to the same levels. I think, if I'm not wrong, it had closed about 430 or something like that, and it opened at 280. Then by 2:15 in the afternoon it was back to 400 kind of levels, though it closed slightly lesser than that. But that basically shows that when there is so much of ferocious rally in the markets, the option premiums go haywire and the puts were just not melting. So during such days, it is best to stay away, and if you have got hedges, they really come in handy, because if only way to make money during such days is if you're long the options, if you have bought them. So anyone who was long calls today made a lot of good money. Puts were not a hedge at all today, so puts did not decay. In fact, a lot of stop losses on the put side got taken, which is quite funny. The only put that decayed today was the Sensex puts. They decayed a bit, but that was hardly any solace for anyone who had calls shorted. So during such days, it is best to move out of the market. In terms of, if you have short positions on the call side, it's best to move out. My systems threw me out immediately in the morning on the call side, and then on the put side. But there was some small hedge that I had, which kind of insulated the movement. It was on the call side, so that gave very good money, but the quantity was not so much, so it could not hedge the complete portfolio. But no regrets, because the most of the money today has been made on the portfolio, which has just zoomed. And as I had said before, if you're invested, then you can't afford to miss such days, because such days come once in, like, this has come once in 4 years. So it is very, very much required that you should be invested in the markets. When the markets are falling, you should invest regularly. And I come back to my whole point that if anyone is interested in making their portfolio, their mutual fund portfolio, they can contact me through the link given in the description box. I will get back to you, and we will work out a very good, strong mutual fund portfolio for you. Because if you are invested well in the markets, only then you can take the benefits. There are a lot of names, individual names, which did not do very well today, or kind of have missed the entire rally. So it is best for retail investors to be invested through mutual funds. So if anyone is interested, please fill up the form. I'll get back to you. So that's it from me now. A great day for the markets, and no complaints. It looks like markets are going to make a new all-time high, and I'm hoping that all of you are invested and doing well. And let's see how the options behave tomorrow. I'm hoping that tomorrow could be a very good day for option sellers. So let's see how things pan out, and I hope you had a good day. I shall see you soon. If you like my content, please do like and subscribe to my channel, and share it with your friends. Thanks for watching. Take care. Bye bye.